September 6th, 2012. And what do we have good about today? Well, Europe is up. The futures are all up. As anticipated, we're going to gap up higher in this bull rally based on Mario Draghi's big economic growth package. What he has says is that they're going to do the bond purchasing program. There's lots of various different things that are coming out in the statements that have to be well thought out and analyzed at this point. This is simply an update that the broader S&P will gap up higher, the Dow futures will gap up higher based on this news. Worldwide, the NASDAQ futures are up plus 14.3 fair value. The S&P futures are plus 8.5 at the time. And what we're going to be looking at today is that European markets are generally higher, and President Mario Draghi stated he's making lots of various statements. One is to stand behind his pledge to do whatever it takes to save the euro. However, the central bank president stated that the European Central Bank will act strictly within its mandate and will buy bonds with maturities of less than 3 years. Before the press conference, the European Central Bank maintained its interest rate at 0.75%. In European economic data, France's unemployment rate was reported in line with expectations at 10.2%. Meanwhile, the European second quarter GDP report showed contraction of 0.2% in their GDP. In a surprise move, Sweden's central bank cut its key interest rates by 25 basis points to 1.25%. Also, Spanish bonds auctions went off as a non-event, seeing lower yields and healthy demand. So Germany is up 1.5%. France and the CAC is higher by 1.4%, all based on the latter part of the statements out of Mr. Draghi, Mario there in Italy. I can only say one thing. This data that is coming out has been long awaited. Inflation may run higher over there. Another thing that they're commenting on is that growth can continue. There's extreme downsides in the shorter term to downside growth still remains on the table there. There's going to be a lot of things in this statement that we're going to analyze about some of these programs that they're implementing. The way that I see it is that they're following what the U.S. did back in 2009 and mimicking up our Federal Reserve over here in the U.S. However, we will be covering what part of the other part of the gap is the ADP report. What I will say is that the S&P target that we have, once we hit that 1440, that was the upside target based on all of these things that are coming out right now, based on the elections and whatnot. And we are in a third trading day of September of 2012. As the markets climb higher within the bull rally of the summer in anticipation of all of this is where does sell the news come in? And now that we're getting more of this news that's out of here, we still have to deal with Asia and Japan and Hong Kong and where their growth is and why is China not doing well in 18 Chinese cities. That's a different subject and a different review. Right now, it's all about Europe. It's all about the fact that the Dow is gapping up. What we will be looking at as far as the trade management goes, you can see the S&P 500 chart here on a weekly level. 1426 is going to be the wall of resistance. 1440, 1442 is where people are going to step off. We would be extremely overbought in the bull rally, and that correction would happen. Some of the gaps that we'll be looking at today is the Google trade, but most importantly is once we got this news now, is where does it sell the news come into play? So when bull rallies and bull markets and all of these austerities and all of these fixes around the world, which means that the world is not good to have all of these programs implemented. And don't be fooled about it. It's an election year here in the United States. Obama's been up on the rack all week in the Democratic thing. The ADP report and the jobs report that will come out on 9/7 Friday morning, tomorrow morning, suggest that that will be higher. However, in my view, it's all a gimmick. And price volatility will be price volatility. We will simply look at the market and how overbought the bull extension is, and where the news, where they were buying that news, becomes on the opening bell today is where you sell that news. There's still, the press conference is going on. There's a lot of things to dissect within these statements. Let us not forget about the lady in Germany. And we are going to take a look and see exactly that this European model, in my view, the reason why they have the problems that they have is because they don't run it right. Because we would not be, the world in itself, the whole world in itself would not be in the place that it's in if things were being done right. So all of these fixes and all of these volatile rallies and all of this pent-up hope that something is going to get done over there, listen, I've got news for you. It'll take the next 10 to 15 years before anything ever comes out of there. That means for the next 10 years of your life, you're going to be dealing not only with their austerity over there, but you're going to be dealing with the United States. And the severeness of this, the severeness of it all is that there are multi-year consequences of slower growth and or lower growth, and then growth peaks and then it comes down. Once again, you inject in the system to try to save the system instead of letting the system do what the system needs to do, and that is wash it all out, cleanse itself. So I will get involved in more conversations with MMTs about what these statements are going to mean. And as far as trade management goes today, is where does that sell script come in? So instead of buying the news, where does sell the news come in? Stocks that are hitting 52-week highs like Apple and Google, and there are many others on that 52-week high list, is that at some point, irrespectively of all the news, it's going to be time to take profits. We have lived in a very different time with markets, and I'm not going to go into details. What I care about today is looking for the most overbought stocks that we'll have to pull back for that side. We will be taking a look at commodity-related stocks. Amazon's going to be up on the plate today. So we're going to be taking a look at where the psychology changes from buy the rumor, where the electronic high-frequency model is to sell this news. So on the opening bell, which will be in 16 minutes, we are going to take a look at the gap open-up ratios and where those ratios are met with sellers and or where they pull back and make higher highs before they finally roll over, and where equities will sit within their overbought bull ranges. We are due for a correction. And once again, corrections are part of bull trends. Is bull cycles or bull trend cycles or bull moves get overextended, they must come down. And we've been playing this game with Europe since June, since the calendar 2012 lows. And we're in this month of September. And there's lots of things that are going to be going on. But one of the things that we're going to analyze carefully is where that trade comes in, where those stocks hit that wall of resistance and have to pull back. And what kind of dollar price range do they set up in their overbought bull moves? Meaning that how much further do we break higher before the party is over within the price volatility? As we said, price volatility to the upside would increase, but also that the reversal volatility, downside volatility, would come into play. And we're going to really find out today on this opening bell as to what both sides of the volatility look like. The upside gap volatility, gap open up volatility, then the reversal volatility. NASDAQ futures are up 17 handles and they just keep climbing higher and higher and higher. And we've seen these many times with this European stuff. Now that it's all said and done and they think they got the resolutions that they're looking for and they've got all of this pent up emotion that they've been looking for, that these things are just going to continue to go higher and higher and higher. No, at some point the overbought bull cycle will reverse. There will be a shakeout in bull cycles. I have never seen one yet that does not have an opening gap, pre-market, huge gap open up. We will monitor what that sell program looks like and what the dollar price ranges look like, and we will take these things accordingly. 52-week highs make 52-week highs. So that's my update going into today, which is Thursday, 9/6 of 2012, and this is done in pre-market live now before the opening bell. There is no rehearsals here. I can tell you that we will be looking at the trade management very carefully. The sell gap, if there is one, we'll act accordingly. When they hit support and they don't want to break lower, then we'll buy them and take them up to the next resistance level, and we'll trade those dollar price intraday ranges based on Mario Draghi out of Italy and all of the great plans to save the world. I can tell you something right now. Volatility, short-term volatility, is to be traded for a profit. Longer term, though, the consequences remain the same.